Have you ever looked at your savings account and thought, is that all there is? Well, if you're ready to get your money working just as hard as you do, you've come to the right place. We're going to dive into count them, six powerful ways you can grow your wealth right here in the capital market. Let's get to it. I mean, it's the big question, isn't it? We all see people out there achieving some serious financial freedom, and we wonder, what is their secret? You might think it's some super complicated strategy, but honestly, the answer is way simpler than you think. That's really it. It's not some kind of magic trick. They just put their money into things that have the potential to grow over time. And today, we're pulling back the curtain to show you exactly how it's done, using the Nigerian capital market as our map. Okay, so let's step outside the comfort zone of a regular bank account and walk right into the capital market. And hey, don't let that name scare you. Seriously, think of it less like a Wall Street movie and more like a menu of opportunities, really, for building the financial future you want. So let's start with the safest part of that menu. We call these lending investments. And the idea here is super simple. You're essentially lending your money to a very, very reliable group like the government, and in return, they pay you back with interest. It's a fantastic place to start your journey. So check this out. Our first two options are bonds and Treasury bills. With bonds, you're lending your cash to the government or maybe some big, stable companies. It's a long-term play, but it's steady and secure. Then you've got Treasury bills, or T-bills for short. You can think of these as the ultimate sleep well at night investment. Why? Because you're lending directly to the Central Bank of Nigeria. It really doesn't get much safer than that. It's pretty much risk-free. And T-bills are perfect if you're thinking short-term because they mature really fast. You can pick a term as short as just 91 days. Or go for a middle ground of 182 days. Or even go up to a full 364 days. But here's the best part. No matter which one you choose, you're guaranteed to get your initial money back, plus the interest it's earned. Simple, secure, done. All right, so if lending is all about playing it safe, this next category is where things get exciting. We're talking about ownership investments. This is all about growth. You're not just lending your money anymore. Now you're actually buying a piece of the action. And with that comes the potential for much higher rewards. But yeah, a little more risk too. And understanding this trade-off is key. So on one side, you've got shares. You might hear them called equities. This is where you actually buy a tiny piece of a company. If that company does well, boom, your investment can grow right along with it. On the other side, you've got commercial papers. This is kind of like giving a short-term loan to a big corporation. The returns are better than T-bills for sure, but there's a little bit more risk involved. And this makes it so real, right? Owning shares isn't some abstract thing on a computer screen. We're talking about owning a little piece of the massive companies you see and interact with every single day. Think about it. MTN, Dangote, Zenith Bank. When they win, you, as a part owner, get to win too. Okay, I hear you. Maybe you're thinking, this all sounds great, but who has the time to research companies and watch the market all day? And you know what? That's a totally fair point. It's why there's a whole category of investments designed to be put on autopilot. So if that question hits home for you, you're going to want to listen close to these last two options. They give you a way to get all the upside of investing without having to become a financial guru overnight. First up, we have mutual funds. And honestly, the concept is just brilliant. You just pool your money together with thousands of other investors. Then, a whole team of professional fund managers takes that giant pot of cash and invests it for you across all sorts of things. Shares, bonds, you name it. You get professional management and instant diversification, all without the headache. And next, let's talk about exchange-traded funds, or ETFs. You can think of an ETF as a close cousin to a mutual fund. It also lets you buy a whole basket of companies all in one shot. The big difference? You can buy and sell ETFs all day long, just like a single stock, which gives you a ton of flexibility. And to make this super clear, look at this real-world example. The NGX 30 ETF basically tracks the 30 biggest and most successful companies on the Nigerian stock exchange. So by buying just one share of this ETF, you instantly own a tiny piece of all 30 of those top companies. It's an incredibly powerful and simple way to invest in the growth of the whole Nigerian economy. So we've gone through 6 different ways to invest, from the super safe to the ones focused on growth. But what's the one thing that connects all of them? What's the most important thing you can possibly bring to the table? Well, it really just comes down to this.
Building real, lasting wealth isn't about some secret formula or a lucky stock tip. It's about knowledge, understanding your options. It's about discipline, and about making smart choices that actually line up with your own personal goals.
And that right there is the key takeaway. More than any amount of money you start with, your knowledge, your understanding of how all this works, that is your real capital. That's what gives you the power to actually take control of your financial destiny. So we've looked at the entire menu of options, from lending your money safely to owning a piece of a company to just letting the experts handle it all for you. The power is officially in your hands now. So the real question isn't if you should invest. It's just, where are you going to begin? Which one of these paths feels right for you to take that very first step?